And what is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be doing some stock analysis for Salesforce, ticker CRM. This is a stock I've now owned for a few months. I got 10 shares at 244, which is pretty much the same price it's trading at today. This stock has not done much over the last 6 months or so. It's down a lot, and it looks, again, this is weird because look at the rest of all the other stocks out there. The Google, the Nvidia, the Oracle, there's a lot of other stocks in this space that you would think this stock should be also be up 40, 50% or something this year, but it's not. Look at the last 5 years. It's basically it's pretty much it's flat over the last 5 years. It is. There's been lots of ups and downs, right? It's been anywhere from 129 to 361. However, it spent a lot of time trading around this $230 mark, and it's flat over the past 5 years. Now, when you combine that with the fact that their numbers have insanely incredibly improved over these last couple of years. $200 million in net income a couple years ago. For a couple quarters, they did that. Now they're doing over $6.5 billion. I would think the stock would be up 200% or something since then. Okay, now that was 2023. Where did the stock bottom in 2023? See, they were probably expecting that right around this time. So the stock was around whatever 160. But I mean, even let's see, when did they report those quarters? Was that ever 2020? Yeah, 2022. Okay, so it was getting pretty bad there. 2022. So the stock bottomed at $128. So it did double up. It did double up since then, right? But it's back down, and I mean, we're talking. I mean, look how big of a difference those numbers are. Over $6 billion. Look at free cash flow now. Over $12 billion of free cash flow, right? Revenue, same thing. $39 billion. A forward PE of 19 or a 20 on this. Okay. Analyst expectations 8-9% revenue growth. EPS of 10 to 11 to 12.7. Nice analyst expectations there. EPS looks good. Here's the price to sales history. You can see we are definitely on the cheaper side of things, only at 6 times sales, which historically is very cheap. I would think the stock should be trading more like 8 times price to sales, or at least a 7. So that's why I made a position. I like this. I think there's not much risk to this one. Again, I'm a big fan of taking out risk whenever I can. This one does not look like a lot of risk considering it's a huge, important company with incredible, growing, consistent numbers for revenue and for net income and free cash flow. The balance sheet is better than it's been in a long time. Over 15 billion in cash, only 2.5 billion in debt. Capital leases of 2.8 billion. How's the shares outstanding? Pretty good. Looks like they're slowly buying back shares. So I like everything I see. The valuation is not that bad. It's pretty cheap. The stock has not moved the last couple of years. I shouldn't say it hasn't moved. It's moved. It's just it's trading at the same price it was 5 years ago. Forward PE of 19. Look at the last couple of years 26, 30, 24. Now we're down to 19. It looks cheap. I don't think this stock's going to go down to 11 times earnings. That would be kind of ridiculous. It's possible. Maybe it comes down a little bit to like a 16 or 17, but at 19 looks like the bottom. This looks cheap. And that's why I think everyone that's wanted to sell the stock has already sold out, because why else has the stock been the same price now for the last 4 months, right? At least 4 months. I mean, there was a little bit of selling here, but since August, the stock is the same price. So I don't think there's any more sellers for this stock, because who wants to sell this stock now? You know? So I don't know. I might even buy more, to be honest. Valuation looks cheap. Price to sales, price to earnings, both look cheap. They're growing at 10%, 9%, let's say. EPS is expected to be 11 and $12. Okay. So let's say we take 12. At the current PE, the stock is going to be at this price, $230, $240. Okay. In my opinion, let's go back over here. What is this stock supposed to be trading? On a trailing basis, anywhere from a 50, 55 down to a 35. Okay. So we could take the middle of that. We could say somewhere around 45, right? That would seem pretty reasonable. 45 times 12 is 540. That sounds like a lot, but I don't think it's out of the question for the stock to be that price in about a year from now. I don't think that's out of the question. Price to sales, anywhere from a six. Right now we're at a six. It's been as high as a nine, even higher in the past, but this is kind of like a bubble here. So we'll call it nine. Between a six and nine, to me, again, it looks like 7.5. We'll say 7.5. Okay, what are they supposed to do for sales? 7.5, 40. This is this year's. Let's do next year's. 7.5 times $45 billion dollars is a $337 billion company. Right now, we're only at 237. Okay, now you can also look at it like the share price is basically the market cap, okay? Which means the stock price should be $340. Again, it just looks like easy money. It's I mean, to me, if I had to only pick two things to pick a stock, it would be, is the valuation low? Is it healthy? Does it look attractive? And is it a consistently growing profitable business model? Business. They put up those numbers. $6.6 billion dollars. Now, the other thing I like to check is, what are insiders and hedge funds doing? Well, not a lot. Not a lot. It's pretty even on both sides. So that's something to take into. Now, this guy just sold, Ken Fisher, he just sold $1.1 billion of the stock, which is a lot. But again, doesn't matter. So that's, oh, here's the other thing. These are all these super investors, meaning all the super rich people. Over the last 6 months, Salesforce has had 7 buys. Okay, so that's good. Not nothing crazy, but something to point out. So yeah, I like what I see. I like what I see. EPS. What are we looking at? We're moving towards $7 EPS. 25 times earnings would be cheap. That would be very conservative. And that puts us at $175. So that means something's off here. Hold on a second. Annual 6.3. Yeah, it should be around. This might be a different. Yeah, this is different because why? Because this one says they're in the 11 to 12. I think this is the more accurate one. I think this is, who knows? And one of them is GAAP EPS, and one of them is non-GAAP EPS. So it's based off. I think it's based off of this number though. So basically, we're looking at 12 times 25 would be a pretty low estimate. That means $300 should be easy for the stock to get at in the next couple months, probably. By the first half of next year, I say it'll be that. And then, if you want to really expand the margin there, the multiple to 30, well, multiply that times 12, now you're looking at $360. And that's where I see the stock being in about a year from now. So that's my analysis for Salesforce. Let me know what you guys think, and I will see you in the next video.